Rivian following in Robinhood's footsteps, setting aside pre-IPO shares for existing customers. Given yesterday's climb in Rivian's first day of trading, those who took advantage of the company's offer saw big gains. Joining me now is CNBC senior technology reporter Ari Levy, who wrote a story on it. And Ari, we must be coming out of the pandemic because you cut that pandemic hair. I see you got the business cut back. Great story. Interesting the way they allowed customers who pre-ordered to also get in on the stock, but not everybody flipping it, huh?
Yeah, well, John, what's particularly interesting here is that we've seen this with Airbnb, with Uber, with this company Doximity that is a marketplace for doctors, where they've offered pre-IPO shares, or IPO shares, I should say, to their customers. The difference here with Rivian is there are no actual customers because there's no actual product on the market. So it's just people who have put down their $1,000 refundable deposit who were in the queue and available for these IPO shares. So the strategy has been implemented by other companies, but certainly an interesting wrinkle here with Rivian.
The folks who you talk to, they're not just interested in one EV company. They're interested in EVs in general, it seems like. Is this a way to kind of brand themselves with an overall potential customer base that's got a lot of options?
Yeah, I mean, there are so many EV companies out there now with high-priced stocks, even though there aren't very many products out there. So you're both looking for an investor base. You're trying to do something, original or clever for your investor base. And some of these companies are going public via SPAC, so they actually can't do something like what Rivian did. And then there are companies that are offering incentives for putting down pre-orders. You're playing in this very crowded field, even though really, if you want to get an electric vehicle out from one of these pure play companies, Tesla is still your only option.